Good morning, everybody. It is January 10th, 8:26 a.m. Hope everybody had a good trading day yesterday. I sure enjoyed a nice trading day. I just had a nice short and crude too. So, starting off the day good. Let's get into the little watch list here. We got VIX, well above the 20 as I mentioned yesterday at 21.54. It's up 4%. Crude up 1%. Was up a ton before, hence why I shorted crude. 10-year yields up 0.24%. Dollar is up slightly. Let's see, bonds, 30-year bonds being sold a little bit, down 0.2. The Dow's down 0.32. Russell down 0.39. ES down 0.48. Bitcoin down 0.7. Nasdaq down 0.77. Now it looks like we're getting a little pullback in the Nasdaq. It was down a lot more earlier. Let's see leaders and laggards here. There's not going to be. Oh well, look at that. Google. Let's see. Google got any news? Privacy fears, abuse allegations. Okay. I just wanted to see if there's any news. Google's slightly up. Not much of a leader, but it is. When out of laggards here, we got the bigger ones: Tesla, Snow, AMD, Coins down 1.95, Nvidia down 2.18, and Baba's the biggest loser this morning, down 2.42. No surprise, Chevron and Exxon are up 1.3 and 1.07. Laggard will get Disney, Roblox, Salesforce. Okay, sectors, no surprise. Energy's topping the list, and the bottom three are financials, discretionary, and semiconductors. Okay, that is that. Now let me get you into the SPY daily chart. Just give me a second here. Sorry for the delay this morning. I was in that crude trade, so let me just set this up. Give me 1 second. I'm going to show you guys the SPY. Okay. So, yesterday, we finally broke those lows. About 408 was the level. Okay, finally broke this trend line. Okay, underneath the anchored VWAP from FOMC now. Okay, not quite at the FOMC yet. Almost this morning. All right. So now, currently the SPY is at 405. So we're about right around here right now. Okay. This is the VWAP from anchored VWAP from the all-time highs, anchored VWAP from the recent lows. Okay, so this is kind of lining up with the 20-day moving average, this VWAP. So let's see. That's the news in the SPY. So we could take a look at the SPY and the weeklies, and you can see just these wicks above just couldn't sustain that yet. Okay. And the monthly tells the story too. The range of the candles, big wick inverted hammer, and we have to see if there's farther downside movement. Okay, let's look at the Qs. Alright, let's look at those Qs. Alright, so let's put the anchored VWAPs on there just to see where we're at here. Okay, so in the Qs, this is the anchored VWAP from the all-time highs. That has been broken. Okay, and at all-time, at the lows, current lows, which sits down here. Okay, now look what the Qs did yesterday. It bounced right off this trend line. Finally broke the 90 MA daily, but bounced off this trend line, which also, it broke a key support right here, about 302. That 302 was a key support level that it needed to break, and it did. There was also another support at 303.79 that it broke. All right, now we have a trend line going lower right there that it touched yesterday and sold off. Okay, currently the Qs are at 299, so they're about right 299, right about here right now. We're almost at yesterday's. We're a little below yesterday's lows. Okay, and let's just look at those on the weeklies. So same thing, had this 307 resistance, tried last week, tried this week, and couldn't do it. Inverted hammer on this week. Okay, now the impressive thing about the Qs, they made such a strong move that they broke out of this monthly balance here that we just kept going back and forth each month, ripped all the way up to here, but now price is at 299. To give that perspective, it's right at the highs of these monthly candles. So that move's been taken back. Okay, let's look at that triple headed monster I talk about every day. Okay, and I said, you in my videos, watch the 10-year yield. It's making a move higher. Okay, that's bad for equities, and it continues to rise. Okay, now let's look at that VIX. I said I had to get over 20, right? Well, right now we're at 2155, so we broke this area of resistance and we're up here. We hit 22, probably at the lows of the overnight session. Kind of pulled away a little bit. We break 22, which I'm going to set an alert right now. So I got an alert there now, just to give me extra confirmation confluence. If we rip above this, that's going to be send us farther down. Okay. Let's look at the dollar. All right, dollar's holding these lows, pushed up again, so we got double bottom here. If you break this 103 up to 104, that it's going to fuel the fire even more. Okay, to the downside. Okay, so that's that. Let's now look at market profile. Just give me 1 second while I pull that up. Hit you with the watch list really quick. Now, a couple trades that I mentioned yesterday in pre-market came out, both of them. Okay, I'm going to bring you, just recap those very quickly. I made a couple shorts on it on YouTube, but let's look at, this is the real-time trading hours. Okay, it's not showing, this is the ES. So I wanted to show yesterday, just to go over really quickly what I said pre-market, right, in the ES. Now you can see we opened here. We only ticked up to here. Okay, remember I said everyone was net long overnight, right? And I said our targets would have been here. There was a demand zone and a most traded price and a prominent POC here. So we did go down to that, right? So that was one trade. Right, and now I didn't take a short in the ES, like I should have actually, but you notice how right here this price action around the most traded price of the week at 41.25. Look what happened. We went through it, came back up into it, right, And then we went up again. Look, we couldn't make it past it, and there was the short. Okay. Now, another important thing is the single prints, the toothpick holding up the elephant that I kept talking about. All right. That finally got cleaned yesterday. So these single prints right here, these single prints finally got taken out. So the market whipped to them. And just want to show you, I didn't have it marked now because I took it off. This is a naked VPOC. I want to show you how powerful the volume profile, market profiles. So this is a naked VPOC. This means it's a volume point of control, most traded price of this day, which I believe is the FOMC. And that's why the market went right here, and it went right there, and that was the low. So whenever I say naked VPOC, that just means an untested most traded price of the week. I mean, most traded price of the day that day on FOMC. So we came right down to that and tagged it. So they're good to use as targets. All right. Now in the Nasdaq, right? So I took a short in the Nasdaq, and I mentioned yesterday. Let me position this so you guys can see it. I mentioned this yesterday. I said what has happened, right? In the pre-market video, I said now the most traded price and the most traded price of the month and the week is here at 125.50. And in my pre-market video, I said a spring is coiling here. I said, and a big move's going to happen. And I said, if we came through this, held it, it was going to cause a big move. And that's what happened. And it broke a very key support level right here. So, very, very big move. I had a nice trade on that. That's why these levels matter, right? I wouldn't talk about it if I didn't see that they work. The levels don't make the market move. It's just, you can't dispute that this is the most traded price. So if everybody transacted this the most over the last month and the week, it's a tipping point. It's a tipping point. Shorts and longs are all in here. When you go down and you can't, you're going to rip all the longs out. And that's what happened. Okay. All right. So let's get into what's going on overnight. Okay. We got the big move that happened. So this is the ES. All right. So let's look. We're gapping lower. Okay. A couple things already stick out to me. Okay. A couple things stick out to me. We broke a key support level 2 in the ES, which is right here. All right. Now, just to give you guys a little roadmap of how my charts look, this is the 20-day simple moving average on the daily chart. So we kind of like, this is acting as support right now. Okay, that's what happened. Now this profile is a wonky looking. I have to admit, this profile is wonky. All right. So, however, what we have, how you have to look at this now, is we broke this support right here, and this is the 9 daily EMA on the daily chart too. So we broke that. We couldn't break that 9 daily EMA. Multiple touches, and then we finally did. Okay, so we're below that now. So now we have selling under here with this spike here. So there's a little thing called spike rules. So as long as you stay, the market stays within the spike, it's bearish. Start to go above the spike, sellers are not as strong if you can't hold it there. Okay. Now we're gapping lower. Price is right here, 40.73. Okay, so this is how I look at things. Okay, so we have the high of yesterday, the low of yesterday, right here. We're gapping lower. Okay, right here. Now, this is a very weird looking volume here. So what happened is we are also about 85% net short. I remember yesterday we were 100% net long. Okay, but now we're 85% net short. So from the close right here, this is all that's long, and the rest is short. Okay. Now, in order for a fade to work, you want to see the market down here at the lows. Okay, so the fade is not as great today because of that. And let me explain why. You can see down here is the most traded price of the overnight. So all down here was the most traded price. Now, what was happening down there? People were shorting. People were shorting a poor location, and they were getting short in the hole. And then when the market ripped up, they just had to get squeezed. They got squeezed. Okay. However, everyone up here, you know, most of them are short. Okay, everyone from yesterday is going to be short. So our key levels today to really look at, I'm giving you a lot today information, okay, but this is how you have to look at it. Here's would be the gap fill. So today it's all about the spike. Can we stay within this spike? Can we stay below the 9 daily EMA and the prior support? Okay. On top of that is the gap. And this gives you market generated information. Okay? Because if we can fill the gap, that's one thing. So that would gap fill. Okay? The next question is, do we gap and do we roll over? That's a win for the sellers, right? That shows us that the sellers are strong. Another thing is, do we fail to fill the gap? That's also strong sellers, right? And then of course the most bearish is the gap and go, which we can go lower, right? So those are all the weak signs. But if with strength, we could fill the gap, hold it, start to go back into range. That would tell you, okay, pause a little bit. We're going back into range. But however, as long as we stay below, I guess the 9 DMA daily, it's bearish because we're within the spike. I would say getting over this level, okay, would turn to be like, oh, okay, what are we doing now? Because we definitely could, if you get some power, you can move back to the most traded price of the week. Now, another key level, I know I'm hitting with you guys with a lot of stuff. I'm hoping everybody's following me. Whenever you have a big move like that in the market, and it's really big, your big line in the sand, and this is what's great, I mean, lines up, right? So this is the most traded price of the week. You don't want to go above that, but also it's the midpoint. It's the mid. Some people call it halfback in Mocha profile, but it's the midpoint. What does that mean? It's 50% of the move lower. So if you do a 50% Fibonacci, right, that's the 50% Fibonacci level, retracement level. If we go above that, then man, this market's nuts, right? Then it's like, wow, are we really going to go higher now? That's what you have to look at. Okay, and I can show you that just by simply putting a fib on, and you'll see. So from the high of this, we go to the low of the move, you'll see it's going to be right there. So this dotted line, it lines up just with the mid that I just said. You see that? This is the 50% retracement Fibonacci, which is the mid. So of this move that happened yesterday. Pretty cool, right? That lines right up with the most traded price of the week. Talk about confluence. Okay? Talk about confluence. So let's get that off. Okay. Surprisingly, we didn't really have single prints, only up here yesterday. Because you know what it was? It was a beleaguered move lower. It was like lower, lower. It wasn't just this rip, 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 which I have to say is more bearish because you had less people just getting ripped. And really, the market started to fall more when Tesla started to sell off because it was holding and holding and holding. And then finally, the rug got pulled. Okay. One other thing that's to note um, is that a lot of volume traded down here. Okay. So you can see we're near the gap. And there is little single prints. In the overnight, I wouldn't read too much into that. Okay. There's a supply zone here that I'm going to be looking to probably put a short on. Okay. Now, where can we go? Here's the most traded price of the month, still down here. That is 40.30. You can see this profile here. This orange profile is the last 30 days. And still the most traded price of the month in the ES is down here. So I would target this 40.30. 40.30. Okay. So that's ES. So let's just really quickly talk about possible trades today. Possible trades. Okay. The gaps are very hard to read. Very hard. And like I said, these shorts have already been squeezed, so that's not in the mix as much. But still is a little bit because you're going to have shorts. You know, everybody's short from this close. Let's say you're short a stock, you're in options, you can't do anything, right? You're just short stock. You can't do it. You could do something now because you could do it in extended hours, but okay. So you take out this overnight high. It's will be definitely be a win for the bulls. Okay, but let's just see what I'm looking for today. Okay, what I'm looking for. So I could definitely see us fill the gap. Maybe have a little trouble, come back up. This is where we pop our head, maybe even above this supply zone. And then this is where you see the tide. Are we going to be strong or weak? I'm going to look at internals. And then I'll look to see any weakness, and I'll look to short. And I would look to target the overnight low first, and then go for 40.30. Okay. Only thing that changed my mind for a long, and I don't know if this happens today at all, would be if we just did this. Whoop. Come up here, break up through the 9 EMA daily, work our way up. And if we come up to here, now, this is also, I know I got green on, usually doing a long. If we failed again here, this could be another short, okay, to go all the way back. Okay, but I'm talking about a long. If we come up here, hold it, hold it, hold it, this could, in this crazy market, take us back up. Because now we're squeezing everybody who is short. It's an extreme. This market's nuts. So I mean, anything's on the table. Okay. Normally, in the normal market, without zero DTE options every day being played, I would say that's less likely. But this market's just so crazy. Okay. I don't think that's likely. I think the short is more likely. Okay. Now, in the Nasdaq, let's look at this. We still have the toothpick holding up the elephant. And that means single prints, okay? You can see from where the single prints are from. They're right here. That candle, FOMC. Okay, so that's why that box is there. Alright, now what are we doing in the Nasdaq? Okay. So the Nasdaq, let's look at it. Overnight highs here, overnight lows here. Okay, same thing. We have a spike. So here's the spike. This is our bear zone. You want to stay within the spike to be bearish. Okay, so you stay within the spike. Now here's the single prints. Now this doesn't count because it's overnight. This does not count as cleaning single prints. However, we did dip into them. And the bottom of the candle of this single prints is, well, it's like more like the bottom of this demand zone is the FOMC. That's the move from FOMC. So how are we going to play this, right? Same thing. Do we fill the gap? Do we fail? Do we gap and go? Do we go into range? Same thing, right? We are also 100% net short. Oh, I mean, not 100%, but about 80% net short. Okay. Got a supply zone here. 9 EMA daily here. Okay. So, same thing. Same thing I'm looking for. Fill the gap right here. Can we make it back up here? And this will tell the tale. Even if we get a little whip and come back, that's a short. You target that overnight low. You could even target the bottom of the single prints, and then eventually this naked VPOC of the FOMC day. That naked VPOC, I will give you the level, is 121.32. The bottom of the single prints around 122.05. All right. Now in the Nasdaq, since the most traded price of the week and the month are together, that's our tipping point. You want to see the market stay below this. Well, in a macro picture, I'm just saying, stay below this, it's bearish. Where's that key level here that you want to stay below as well is right here. Right there. 124.56. Notice that's almost the overnight high. Okay, that level is very key. So it lines up very nicely, because I know the supply zone's here, but we got just to give this some confluence here. We got top of the spike, old support that got broken that can turn into resistance, overnight high, supply zone. Okay, that's a lot of confluence there. So people, if they do get long, will probably take profits here. Okay, then the way supply zone works, we should get some reaction when we come in here, and then we can see, because we actually got single prints in the overnight right here. Now to clean this up a little bit. All right. Now again, this is the outside chance I have to give it because it's only logical. We could fill the gap, push up, hold the 9 EMA daily, struggle in the supply zone, whip up, and if we start bouncing and bouncing and bouncing, we could possibly tag this. Like I said, we go over this. Whoa. If it holds, this could be the next move lower. So it's just a very important level. That level again is 125.50. Most traded price of the week and the month. Okay. So obviously the bias has to be lower. It's just a matter of what happens today. We have Michigan consumer sentiment, I believe, at 10 a.m. today, so be careful with that number. One other thing I wanted to show you guys was this chart I love looking at, just to give you some more perspective. Okay, for anybody who's new to, I don't know if anybody's new today. Really quickly, every blue profile is a weekly profile. Every white outline profile is a monthly profile. And then every candlestick's a 4-hour candlestick. And every white is the most traded price of a week. Every pink is the most traded price of the month. All right. And then I have two composite profiles on the right here. The white is this year, 2023. The heat map, the big one, that is from a year ago till now. So always roll, it's a rolling year. Okay, and I want to just show you how you can quickly look at this chart and get some targets and where we're going to go. Okay, look what happened. 41.29, 41.28. The most traded price of this week. Now, just to explain something, these are not rolling like I have on my other charts. These are current week, current month. But however, this gave you the tip. Most traded price and the most traded price of the week and the month were equal. And I said big moves happen from these when they equal. Big moves happen from them. Okay? And these give you where they can go. Okay, so when this is the most traded price of this year, which is, let's see what that is, 40.15. The most traded price of the rolling year is 39.89. So those are huge levels. I think we're going there. So I would say, just look how this market works. I'm going to show you this, okay? This is very cool. So you can see the balance here with the most traded prices when they were all lined up. What did we do? Exploded up. Now check this out. Where did we go? Where did price go? Look at this large volume. It went there. That's what I love about buying profile. It went right there. And if we couldn't go higher, where is it going to go back? Right here to these big nodes, to this big volume, which it happens to be the most traded price of the last year and of this year. So I believe we should eventually go down here. Now, it doesn't mean it has to happen, but that's the most likely destination. Okay? And you can see over and over again, I'm a big proponent of volume profile. I'm going to show you guys just what I'm talking about. Okay? I can make this very skinny, but I just want to show you when the most traded price of the month and the week equal, what happens. Here we go. Equal, right? What had happened? Big move higher. What happened when the most traded price of these month lined up with the year and the week? Big move higher. You see the trend? Do you see how that works? That's why I said in the NASDAQ the other day, that's why I said that's what happens. Okay? So I'll show you the NASDAQ chart. Same story. Okay? Perfectly, again, the most traded price of the week and the month line up. What happens? Boom. You could even see the large node here that it built. Where is it going to go? Biggest node is down here. That's the most traded price of the rolling year, and that's 11.16. That's 11698. I do believe if this market continues to roll, we go there. Could make a pit stop here at 121.23, which is the most traded price of the previous week. Okay, that's how you can look at this and get targets. Now, this low is so poor down here. If we revisit that, oh my lord. Poof, that's going to send the market crashing. But we have to see. Okay. The last thing I wanted to show you guys, hit you with your loss list real quick. I'm going to show you just real quickly the ES chart with the fib on it. And just to show you, the long time fib from the FOMC. So check this out. Here's FOMC right here. We launched, right? The top of that move is here. Put a fib on it. This is what's cool. Okay, you put a fib on that. And you can see the market pulled back into 61.8, which is usually not good. But it didn't really hold below it, right? And then we kept popping up. We had this trend line coming here, and we kept making lower highs. Right? A big wedge too formed, but forget about the wedge. And then what happened? Boom, came up again. Yesterday, what happened? And that's why I love Confluence. 50% Fibonacci levels here almost lines up with my most traded price of the week. We came down here, came up again. Boom, cleared the 61.8, held it. Now we're doing this, coming down lower. So 40.50 is the FOMC low. Let's see what happens. All right, because I say if we break that, we're going down to 40.30. And I'll leave you with that. Sorry, this video was a little long. I just wanted to show you guys that. All right. If anybody's, I might have been talking to myself. I'm not even sure. Oh, it is Colby. Just to show you guys real quick my crude. Just to give you, I just want to give you an example of how powerful the profile is to give you an example here. I could even do it in a, let me do it in a time frame here to give you some perspective of how you can use it, right? Here is the most, this is good. Colby, hope you're still watching. Check this out. So 80.16 in crude is the most traded price of this year and the most traded price of the last year. Right here. Do you see what happened today? So what I thought, we launched off here because of news in crude. We launched off the most traded price of the week. We launched for some news. Okay, that I believe that they're not changing anything to production, the Saudis, about the Russian oil cap. That launched crude up. Okay, but this level is support here, most traded price of the year and of the rolling year. And you have to think of psychology, okay? Look at the market, what it's done. It's overbought. Crude just made a monster move and came up to that area. I shorted here. My resistance here was great. I had confidence that doesn't mean it's going to work, but I had confidence. And then when that hit, what happens is everybody who was long probably took profit. Everybody who got long up here was like, uh-oh, and they just flushed, and I took a target right there. And this doesn't always come easy like that. But I saw that pre-market. I saw that overnight. I traded that before. I traded that probably at 8:15, 8:20 is when I took my profit. But it's just great to see these levels work so great. I mean, it's crazy. I wouldn't talk about it unless I didn't see something that works. All right. Thanks, man. All right, guys, girls. I wish everybody good luck today. Hopefully, now my pre-market trades have been pretty on key of late. That doesn't mean they're always going to be, but let's hope to see some of that come to fruition today. Okay, let's see some of it that can come to fruition today, and just be very patient. Give me a comment, like, or subscribe. Ask a question if you got a question. I don't care. I mean, I don't mind answering questions in the comments or in the chat. Okay, and Please share, retweet me. I have Twitter. And that's about it. And stay green. And I will have a great weekend. Be back. Remember, Michigan Consumer, 10 a.m. Be careful if you're in a trade. All right. Everybody have a great weekend. I will update again. And I'm not even sure if I do a short if my subscribers get notified. Maybe Colby, you could tell me. I'm not sure, but I'm not sure if you get notified that I made a short. I don't think you do, but I don't know. I've been making them, and so um, maybe I'll do it again today. What I'm seeing. All right. Ah, okay. Thanks. Thanks. I didn't think so. I didn't think so. So if you go to my channel, you'll see the shorts that I did. That sucks that you don't get notified with shorts, but all right. Have a good weekend, everybody. I will check in later if there's something to note.